So I want to say a big welcome to all of our attendees and also two of our special guests today. For those of you that don't know me, I am Sarah Corley. I'm DFI's Community Manager, and it's my pleasure to organize the DFI webinar series. So I'm always looking out for new topics and interesting guests. And well, I had the pleasure of also having the opportunity to have spoken before and also heard both of our speakers today speak before. So I know we're in for a good session today. Just a couple of housekeeping things before we kick off. As a reminder, we would love to hear your comments, your questions. So please use the Q&A function, which you'll find at the bottom of the screen, to pose your questions for today's panelists. And also, just as a reminder, we're recording today's session. So if you really enjoy it and want to share it with others, or something crops up and you get disconnected from us, don't worry. Tomorrow you'll get an email with a link to the recording to share out. So interoperability, that's our conversation for today. I always fear that sometimes these kind of topics can be a little bit dry, but I know our two guest speakers are incredibly knowledgeable on this topic, but also have some really good insights and passion on the topic and why it's important, both to them, but also their countries, and also financial inclusion, which is a big part of the conversation that we're going to have today. So I've been joined by João Gasper and Gertrude Cardombo. João has his own fintech organization in Mozambique called Paytech. João is also the president of the Mozambique Fintech Association, which formed out of the DFI community of practice. So we're really excited to see what's happening with our communities in Mozambique. And we have Gertrude, who is the CEO of the National Switch in Malawi, a regular speaker at our community of practice there, and hugely knowledgeable on the topic. So between the two of them, many years of experience and knowledge, which they are really nicely and kindly sharing with us this afternoon today. So I'm going to let them hand over to them, and they're going to take you through today's discussions, and we'll finish as always with a Q&A. But any questions you've got, do put them in the Q&A as we go through the session, and we'll come to them either at the end of each of their presentations and at the very end as well. So I'm going to hand over firstly to João. So over to you.
Hello everybody. Thank you very much for your attendance. And first of all, thank you DFI and Sarah in particular for organizing this webinar. And I'm very excited to present my ideas and my knowledge about this. I've been working in digital financial services for several years. I'm working for digital banking and central switch since I get out of the college, so back in 85, something like that, when 1985 in Portugal at SIPs, in central switch SIPs. So I have more than 35 years in this kind of industry, let's say. As Sarah told you before, I'm resident in Maputo, and recently, in the past 3 years, I've been, let's say, the happiness to join a project hosted by FSD Mozambique to implement the standard rules for interoperability in Mozambique. So most of my presentation will be focused on that project in Mozambique, but I will start it, and let me share my, my screen down there. Okay, I think that you are seeing my first slide. The agenda, yes, the agenda is this one. I have something around 20 slides, but I will run over it because I don't have to spend too much time showing the slides, and let's have some conversations after the presentation, my presentation, and also Gertrude's. I will address the basic principles about interoperability, some recommendations from ITU, and then how to implement interoperability, what is summary status of interoperability in some countries around East Africa, and not only East Africa, also in other countries, in other regions, let's say. As I told you before, I will focus also on Mozambique case because I think it's a good example to implement in other countries, and finalizing with recommendation. Well, what is interoperability? There is a general definition, as you may know. It's the ability to interconnect and to put two systems or two products to dialogue to each one. But for our concern and for our purpose, the definition of interoperability in the context of financial inclusion, I took it from the CGAP report, and that is a common definition. It's the ability for the mass market or for the customers, users, to use their accounts to perform specific use case, namely P2P, between accounts of different providers. So if you have a service provider for a mobile money operator and another service provider, it could be another mobile money operator or a bank, for instance, the interoperability is the way that we can exchange and we can exchange values between those two service providers. Well, there is 5 types of interoperability when we discuss in terms of principle, let's say. And from the basic one, there is theoretical interoperable systems to the effective interconnected. That's one that we must be more concerned about, because that's the one that accomplish the digital financial service for financial inclusion, at least in my perspective. And for doing that, for achieving that level of, let's say, of interoperability, the systems must require to be interconnected, technically interconnected, but also be effective in use by the customers. It does mean nothing if you have a good interconnection system with multilateral connections or with a central switch, but no one uses it because, for instance, of high costs or technical problems that the people experiment in their way of using the system. So let's focus on the level 5, is effective interconnected systems. And let's also begin with 2 or 3 recommendations from the ITU. ITU in 2017, 3 years past, published a book of recommendations for financial inclusion for the most financial inclusion for the people around the world that are excluded for the systems. And I took just 2 suggestions that I think it's relevant for this presentation. The first one is the criteria for assessed interoperability schemes must be clear and must be published and must be authorized and regulated by all the banks and all the service providers, banks and no banks, must join that scheme, let's say. Also, the regulators should standardize digital identity registration, because that's one key factor or a key element for having interoperability between DFS operators and service providers that must rely on digital identity. Another recommendation about the mission for interoperability is, and that is very important to when people are implementing interoperability in a country, should enable users to make electronic payment transactions with any other user in a convenient, affordable, fast, and seamless and secure way. That means that we must be able to exchange between two participants or 2 service providers in a seamless way, in terms of costs, for instance, in terms of speed, in terms of availability of the money, in liquidity of the money, of the values that we are transferring between the two players. So the payments must not be perceived as being different from between 2 players, between 2 service providers. The user must have the same experience as he has on his own network. When I exchange value, or when I transmit or make a P2P transfer to another colleague in the same network, I must expect the same way and the same response time and also the same costs when I do it to another network. It's called on us or not on us. So this is the only that contribute very much for the users of the service, the value, the deposits of the value of the money in terms of digital money, and let's say, not leading the people to cash out the value if you have a very good and effective interoperable system. And that drives the financial inclusion for sure. Another aspect that is important for this suggestion of this recommendation, the transaction should be fast. It's no way to use it if you have a clearing settlement of 2 days or 1 day, as we have it on the bank systems. We must have instantly payments in terms of digital, if you want to substitute cash transactions in financial inclusion systems. The last one, or the second one that I choose here, is the role of public authorities, let's say central banks, for instance, and also the private sector stakeholders. It's important that when we implement an interoperable system, all the stakeholders must be involved, and it should not be mandatory from a central bank, but it should happen and lead by the industry. That's the position that I have, and also some colleagues in this area, and there is several projects ongoing or that has been put in place in the past with good and with positive impact, because those initiatives in terms of interoperability was driven by the industry and not mandated by the central bank. But the central bank must be always present, at least as a recommendation or as being informed what was being done. But we are talking about interoperability and what is effective interoperability. Effective interoperability, when we talk about it, is where there is rules and agreements are in place that enables that interoperability. It must be a book of rules and agreements between all the parties to have effective interoperability. And also the fees that are agreed between the participants, let's say the financial service providers, MNOs or banks, or MNOs and banks, must be at a level that does not disincentivize the users from using the system. It's not good having a fee for transfer money between a mobile wallet and a bank with a different value on the opposite side. So the symmetrical values must be an achievement and must be a goal, let's say, when we are implementing the effective interoperability. Also, there must be a technical capability to address transactions in a real-time manner, let's say, because when we are talking about low-income people, we are talking about people that have all the interest to receive the money as fast as possible. So instant liquidity is a must, and that only can be achieved with real-time transactions in terms of technical implementation, let's say. Another one is the ability, or there must be no surcharging when we are making transactions off net related to transactions on net. As I explained before, I must not expect to pay more if I want to transfer money between two different operators or two different financial service providers, and that should be the same value that I have on my own network. To implement the interoperability, there is that depends in the right balance between three aspects, let's say: the governance models or the governance institutions, the business models that we implement, and technology. And that should be the phase, the steps should be in this order. First, discuss the governance. Second, discuss the business model. And lastly, discuss the technology where we have to implement, or where we want to implement those business models and those governance schemes that we prepare. When we talk about governance, it's the questions about decision making, about the processes, the rules, the operations, the risks, the frauds, things like that. There is several types of governance possible in terms of interoperability. The first one and most common or most easy one to implement is bilateral between only two institutions. Multilateral is where 3 or more institutions came together and define, for instance, a scheme that everybody complies with, or another one is a third-party implementation, for instance, like Switch. It's normally a third-party implementation. In terms of business models, that one must be a balanced economic between the interest of all the participants and the costs for the end user. That's also an issue that must be addressed correctly. And finally, the technology. We can implement interoperability in several ways, namely in direct connections, as we have on the peer-to-peer interconnection between two entities, or through a central switch. That's the trend in most of the countries, at least in Africa. That's the trend that we are assisting right now. Well, another aspect that we have to discuss and to see the difference and choose what are the best for the governance policies and for the business model that we choose in first place is how to implement it. It's a scheme, a multilateral scheme, or an interoperable switch. And there is some differences. I don't want to take too much time in reading those differences, but the most important is, for instance, is concerning the defining the business rules and to implement those business rules. It is more easy to implement it on a switch because the switch can couple with the things like settlement, clearing, also risk management, fraud management. It's easier to implement on the switch. But for the other side, it should be less expensive for the end user when we have a multilateral scheme or a bilateral interconnection between the financial service provider. So that is a trade-off that we must be very careful to address. When we talk about business models, principles, the question is, as you see, those two guys down there, if people have to make some calculations about what will be the costs for sending money between PSP, FSP A and FSP B, or between a bank A and a mobile wallet B, people are making so much confusion, so much calculations that is a way to not doing the transaction, let's say. So that's one reason people, if the commission fee structure is very complicated or is very different, it's not symmetrical between the two parties, people are not doing the transactions as we wanted and are still making payments based on money or other ways that it's not interesting for digital economy. So, the financial service provider must follow those principles if we have to have a good business model to implement. Must differentiate consumer cent fee pricing on us or not on us. Don't have to differentiate that, but the prices should not disincentivize off-net transactions, so that they should be equal. It's not mandatory, but it's easier for the customer if the values are easier and also if they are symmetrical. Okay, I'm not saying that the value should be zero. It could be a value, but it will be very good for, in terms of financial inclusion and for digital financial service, increase usage, let's say, if we could achieve, or if we could achieve a single commission fee for all the service, and it is independent of the value that we want to transfer. If a country implements that, I think that will be a very good, a very positive start for a good adoption of that interoperability in the country. When we talk about business models, there are three types of business models normally applied to interchange fees. We have, when we talk about transfer money or transfer values between two entities, we have the sender, we have the receiver. We are not talking about the customer, we are talking about the service provider. When we say that we have a model which that says that is a sender pays, what that means is that the sender FSP, the sender financial service provider, will pay a commission to the receiver financial service provider for the service that they have implemented together. The disadvantages of this model is that the sender financial service provider will increase the cost for the end user because he must have the income, or he must receive the money that he has to pay to the sender. So the opposite one is the receiver pay model. That means that the receiver institution that receives the money will pay a commission to the sending party, to the sending FSP. That is the most effective business model for financial inclusion, because, as you may understand, if the receiving party or the receiving MMO, mobile money operator, pays a value to the sending one, the people that are sending the money don't have to pay a commission too high to sending the money. So the sending financial service provider can decrease the value for the commission that he collects or he receives from the customer. That's one that several countries are implementing, but most of the countries, when they started to implement an interoperable system, that's the case, for example, Mozambique, they agree with a no interchange value that say the sender keeps all model. That's another way of saying it. That's it. The commission that the customer pays to the sending financial service provider stays at that sending financial service provider, and you don't have to split that commission to anybody else. So that's the model that normally the countries are adopting when starting the interoperable system, but the most effective ones are those that evolves, let's say, to the receiver pay business model. I'm sorry for the size of the letter in this table, but the presentation will be forwarded and distributed to everyone. And down there you can see this is a table of several countries in East Africa, and this is a resume about what is happening in terms of regulation for implementation of the interoperability, what is the governance model, what is the business model that was discussed and implemented, what is the technology in terms of implementation of interoperability, and what was the approach. Just let me say something more about Tanzania, because Tanzania was the first country in the world to have the interoperability between all the MMOs, all the mobile money operators. And that happened in 2014, 2015. And that is the graphic that we can see in a recent report of CCAP. Unfortunately, the date is only until 2017, but as you can see, compared to other 5 countries, Tanzania shows impressive growth in terms of P2P transactions, interoperable transactions in the country. Compared, for instance, with India and with Peru, for instance, in the Central America, there is also an interoperable system from the beginning. Tanzania is far behind, far ahead of all the others. Also in Mozambique, we have a situation more or less like with Tanzania, but we didn't implement interoperability between the three MMOs because they agree in terms of a common regulation and a common governance model, and also the business model. It is a no interchange fee model, but they never implement it because there is very symmetrical market position in Mozambique, and the dominant MMO don't want to implement interoperability in terms of wallet to the other two. So there is some kind of pressure from that mobile money operator. But recently, the central bank decided to encourage the interoperability based on the SIMU-RED. SIMU-RED is the central switch, and I know that in last month the three MMOs have already started to doing tests with SIMU-RED, and let's see when they implement that. Another approach, it was a very small study or a survey, let's say, that we did in the past 2 weeks involving these countries on there. And what we want to just to summarize is the number of MMOs in the country, and if there is any interoperability between those MMOs, and if so, what is the type of interoperability, and also between the MMOs and banks, and also what is the type. As you can see on this graphic, if you have a complete field circumference, there is a complete interoperability between all the three MMOs, for instance in Ghana, for instance in Pakistan. When we have this kind of symbol, it says that only between the three, only some of them are interoperable. And the model, this is a centralized model based on a central switch, and this is a mesh model or a multilateral model based on direct interconnection between the service providers, or let's say between MMOs or between MMOs and banks. This is a resume, and also that it was a very, very interesting study that we did it, including the values, the costs for the P2P for transferring $10 between mobile wallets and between mobile wallets and banks. This is a color graphic scheme, and you can see if we have a green one, it's completely free. If you have a yellow one, is between $0 and $0.50, the cost for one transaction. And if we have this orange one, it's around $1, and those one are more than $1. What we are saying is more than 10% of the cost of the value that we want to transfer. That's the commission that we pay. This is a resume, and you can appreciate when we receive the presentation. Well, let's go to the Mozambique case, and let's see what was the status in February 2017. It seems complicated, but just briefly, we have three MMOs here. They are not interconnected. They are only possible to make P2P inside the network, as it is, or buying top-up for the mobile phone. We had also the SIMU-RED that is interconnected with all the banks and also with the MMOs, but only for cash out. That was a service that was put in place back in 2014, 2013, let's say. So those two MMOs can cash out at the ATMs. But there is no interconnection in terms of interoperability. All the banks are interconnected, and also the entities like water services, electricity, television, cable TV, and things like that are interconnected with banks and with the MMOs, and they can pay for airtime, they can buy airtime, they can pay for bills and things like that. Well, that was the case in 2017, and what we did with the FSD project was to put in place a project to implement what we call scheme rules for DFS interoperability in Mozambique. It is a manual, a common agreement manual, but developed by the industry, by the banks and the MMOs, to define the rules and the principles for the interoperability. This is the roadmap of the project. Let me just emphasize those milestones. We had meetings with central bank. We have several information points to the central bank about what was going with the project, and then we came out with the document in late December 2017. Well, the project started with direct interviews with all the financial service providers in the country, around 14 banks, 2 MMOs, and one small microfinance institution. And we asked the guys about what is interoperability for them, what is interest for their organization, what was the initiatives that they have in place, what services and what use cases are more important for them, how to implement interoperability, what are the constraints and other aspects about financial inclusion. As a consensus point, we get those here. So everybody agrees that the first use case should be bank to wallet and wallet to bank, so in the two directions, P2P, and that should be a business model, a non-disruptive business model in terms of the rentability of each provider, and the rules and implementations and all the process must be driven by the industry and not imposed by the central bank. That was the objective of these financial service institutions. And also they agree that it should be a minimum overhead cost for not honest transactions, because that's a goal in terms of implementing the service and address the digital financial inclusion. Also, we agree that the project must be approached in 3-phase steps. So first, we must discuss the governance model and rules. Second, the business models, and lastly, the technological implementation. All the DFSPs are available, so they all want to contribute to that manual. And what we decided, we opened, let's say, a survey, and those were the institutions that came together, and we formed a work group. And during the rest of the year, we discussed the rules, the manual, and at the end of the work, the industry was left with the document for multilateral application with principles, rules, and also the fraud management risks and all the things that must be addressed in terms of interoperability in Mozambique. We also discussed that the second phase that never happened, never happened until now, was the P2P between mobile wallets and the P2P in fast payment process between all types of accounts, account to account in fast payment process. That was interesting for all the present, but we did not address yet these let's say this second phase aspects. So the document, and I'm just finalizing, the document or the agreement, major definitions or major achievements that we came together as a work group was that the principle was available for open for all digital financial service providers. We will have a government committee. All the decisions are taken by 75% of the votes, and one vote per service provider in the perspective of the size or the transaction volume that he represents. The first case was bank to wallet P2P, and the reference business was no interchange. Settlement and clearing, we discussed it to use it because we don't have, they don't have it down there in that time, a central switch. We discussed it to use a pre-founded NOS2-VOS2 system. All agreeing to address effective interoperability, the principles of effective interoperability, and also to achieve equal service commission for transactions made inside and outside the network, and also a symmetrical value between the services. This is the organization of the document. Let me say that it was based on a template provided by EFC. That also was the same template that was used in Tanzania and Uganda, and it's an open document that everybody can use with the mention to the EFC. So it's a good base, a good working base document. So what is the status to date in terms of interoperability in Mozambique? It seems a little confusing, but just to represent, those are numbers, and those are correct numbers that I get this month. So we have 4.8 million bank accounts, and we have more than that in terms of mobile wallets. M-Pesa has 95% of the market share, and the other two have those numbers down there. Those are correct numbers and are actual numbers. So we have bilateral interconnection or interoperability between those two entities, between M-Pesa and the three major banks, and between MOL, that's the another one, and those two banks, and also they are discussing with those two banks. But this is implementing based on bilateral agreements. What is now happening is let's say not by the imposition, but by the leadership of the central bank, they are migrating to the SIM-RED platform. So there is 18 banks down there already connected, and now they are connecting the three MMOs to be interconnected and to be interoperable between them and between also the MMOs and the banks. The test phase is ongoing. I think that is ongoing in this month. Started last month, but is going also in this month. But there is no date yet for going live. Let me just finish with a slide about costs for P2P commissions in Mozambique, and just to stress that comment that I made before. When we have things like that, you see, when we want to transfer, for instance, $15 around these, the costs are completely different between several service providers, and this is the same problem. People are making calculations. People are confusing about costs, and so they don't do the transactions in terms of digital transactions, and they prefer to pay in cash. That's not addressing the financial inclusion. So the last slide. This is my, let's say, a summary of all that we have just spoken before, but those four points for me are the critical success factors for implementing the interoperability in a country addressing financial inclusion. So first of all, it must be all the digital financial service providers must be committed with the system, and they must choose a use case to start with. And most of them, the use case that we want to start is P2P. Rules and models must be defined by the industry and not dictated by technology or mandates from, for instance, the central bank or the government, but must have the support from the central bank, as we did it in Mozambique. The business model and Energy Service Commission must contribute to the effective interoperability, as we described it before, and namely, or most important, there must be no surcharge for transactions outside the network, and must be a real-time transaction system. And if we want to evolve or to implement in terms of technology based on a central switch, the suggestion is to use a push payment system, because usually the banking card system is a pull payment, it's not a push payment, because that's the technology that can slow down the processing and validation process, also reduce costs. And as you see, when we transfer between bilateral agreement between two parties and we insert a third party in the middle, there is an increase in costs. So if we can use technology to reduce the costs, it's benefit for the final end user. And also the push payment can increase immediately liquidity. That's one of the aspects that is very important for financial inclusion. And it can power new electronic transactions and new services when we implement the switch based on push payment. Well, I'm finished, and I'm quite happy to respond to any questions right now or after the presentation. Gertrude will do it next. Sarah, back to you.
I think let's hear from Gertrude, because a couple of the questions I have a feeling that Gertrude might be answering in her presentation. So let's hear from Gertrude, and then we'll come back to all the questions at the end. So Gertrude, over to you.
Thank you very much, and good afternoon, everyone. It's a pleasure to be, and I'm humbled to share experiences that I've gained over the years here in Malawi. As Sarah has already introduced me, I'm very passionate about DFS, and I am a cohort of DFI. I've done about 10 courses, and I'm still going on because I enjoy those courses, as most of you. Today, I'm going to share with you my experiences with national switches after implementing a national switch in Malawi. Malawi implemented a national switch in 2014. It is a digital platform that has created a digital ecosystem for retail domestic payment systems or digital financial systems in the country. The switch that we have implemented in Malawi, it's an all-inclusive switch. And when I say all-inclusive, I'm talking about the fact that participation on the national switch is open to commercial banks as well as non-banks financial institutions, such as the mobile money operators, any third-party processors, any aggregators or fintechs, as well as microfinancing institutions and savings and credit cooperatives in the country. The switch was fully funded by the government of Malawi through a soft loan that they got from the World Bank. And the operations of the national switch are managed by a not-for-profit making organization called the National Switch Limited. That's where I work. We started off as a project. And then from a governance level, in terms of who owns the national switch, the national switch in Malawi is privately owned by the financial institutions themselves. So we have got all the commercial banks in Malawi, as well as the mobile money operators, and an aggregator for the microfinancing institutions and savings and credit cooperatives owning equal shareholding, share equity into the national switch. And what that does is at the board level, at a shareholders level, it gives them equal voting rights at the board. In terms of Although government funded the national switch, they don't have any share equity into the national switch, and neither does the central bank, the Reserve Bank of Malawi. They don't have share equity into the national switch. So because the national switch is owned by the members, it is also governed by the members. So any decision in terms of the scope, as well as the operating rules, and anything, be it strategy and policies that are meant to drive the operations of the national switch, those are collaboratively arrived at by through engagements with all the stakeholders. Nonetheless, the fact that the national switch in Malawi, it's one of the interventions that government of Malawi had to undertake in order to address digitization of payments in the country, as well as to address financial inclusion initiatives in the country, decision-making, as well as policy. Government of Malawi, through the Ministry of Finance, as well as the central bank, are involved. The board of the National Switch Limited, the organization that manages the National Switch, includes all the chief executive officers or the managing directors of the various financial institutions, that is the commercial banks, as well as the aggregator for the MFIs and the SACCOs, and the managing director or chief executive officers of the mobile money operator companies in the country. As I already pointed out, that participation on the national switch is open to both commercial banks and non-banks. Now, that is about the national switch in Malawi. I'll go on to the role, to discuss with you the role that a national switch plays in the country. So I'll take two approaches. The first aspect is within the country, as well as at a regional or international level. Now, in terms of the main role of the national switch is basically to offer interoperability of digital financial systems in the country. So it is a national switch which initially is implemented to cater for domestic interoperability in the country. The main the functionality that it performs apart from interoperability, in Malawi we have two approaches. We do have financial institutions that have got their own individual switches. That those switches are basically driving the other digital channels that either banks offer. And we do have other financial institutions that do not have any switch of their own. So we do allow all of them to integrate to the national switch. In the case where a financial institution has got its own switch, what we are offering for them is basically interoperability, clearing, risk mitigation, as well as settlement capabilities for the interchange transactions. For those financial institutions that do not have their own switches, then National Switch hosts their digital channels directly on the national switch. In that case, in addition to the other functionalities that I've pointed out, we also do transaction processing for them and fraud management for them. Now, in the case of interoperability or the role of the national switch within the country, national switch plays a role of clearing domestic transactions in the country. We focus mainly on digital retail transactions that are interchanged between the financial institutions through the national switch. National switch facilitates interchange of transactions between the authorizer, or that as well as the receiving institutions, or the sending institutions and the receiving institutions. And the national switch, because any transaction that is switched through the national switch is instant for the consumers. So between the peers, that is the receiver, the beneficiary, as well as the person, the consumer that is sending those transactions are instant, meaning that the sender gets to be debited instantly at the point when that transaction is being authorized. And then for the beneficiary, that is the consumer that is receiving value of that transaction, they also get value of that transaction instantly. Being a national switch, it is available 24/7, regardless of the time or the day. So it is available during weekends, as well as on public holidays, specifically for the consumers. For the financial institutions, for them to realize settlement, then that happens within the concepts of the settlement windows that are dictated by the central bank. The national switch also processes, I've already pointed out that it processes settlement at the end of the day. So we do the clearing of all those interchange transactions, and at the end of the day, we process settlement. So as national switch, once we do clearing, we produce a settlement file that is digitally transmitted to the central bank using the RTGS system to settle those transactions. As you are already aware, the fact that most of the commercial banks have got, they maintain nostro accounts or current accounts with central bank, and we use the same structures that are put in place by the central bank for us to carry out settlement. For non-banks in Malawi, the central bank do not allow the non-banks like the mobile money operators or the microfinancing institutions to maintain current accounts at the central bank. So for those ones, the requirement is that they get to be sponsored by a commercial bank for them to participate in settlements. And the other part I want to also bring out is the fact that in Malawi, we have seen different institutions coming together to work together, although they are competitors. And then it hasn't been specific to just one industry, like only commercial banks. But in terms of collaboration and engagement, countrywide and within the financial industry, the national switch plays another role of facilitating collaboration and engagement to drive innovations at a country level that are meant to address financial inclusion and to ensure that the poor and the vulnerable are also socially, to ensure social as well as economic development for everyone else, especially the vulnerable and the poor. And the government of Malawi, through the Ministry of Finance, and with technical support from development partners like the World Bank, we've seen UNCDF, and different other development partners, what they did was they came up with a roadmap for Malawi to drive financial inclusion. And now in that roadmap, that's where National Switch was born, because it was noted that there was need to strengthen the financial infrastructure in the country. And one of those financial infrastructures was the National Switch. Now, in recognition of the fact that most of the financial institutions in the country had invested quite a lot in coming up with digital channels or investing in DFS, one thing that was really missing in the country was interoperability, because what we saw was everyone was working in isolation from the other. Interoperability for card-based transactions was mainly achieved through the international card schemes. And then for the mobile money operators, we had quite a lot of bilateral arrangements between banks and the mobile money operators. This is something that was costly at a national level and probably could not be sustained at a national level. You know that when we have got so many arrangements, it tends to escalate cost, and that cost tends to be passed on to the consumer. So it was necessary to provide convenience for the uptake of digital financial services in the country. And the fact that the instantaneous nature of transactions that are passed through the national switch, and the fact that the services are available 24/7 on weekends and public holidays tends to help in terms of building trust in digital financial services for the consumers. It also it ensures reimbursement of merchants So in terms of uptake of digital financial channels by merchants also tends to increase because the transactions are instant. Now that is at a country level. I'm also going to share with you some initiatives that the National Switch in Malawi is undertaking at regional level as well as at international level. Now, when we're talking about regional level and in terms of interoperability, what Malawi is working on is to enable international remittances to be clear, transactions on international remittances or cross-border regional remittances to be cleared by the national switch. And the fact that we have got the mobile money operators as well as the commercial banks and the aggregator for MFIs and savings and credit cooperatives integrated to the national switch, it means that the last mile on disbursement or receipt of transactions is addressed. So all remittances, what we're planning to do is, and working in collaboration with the SADC Banking Association of South Africa, is to ensure that remittances that are sent to consumers in Malawi, they go directly into their accounts. And those accounts can be bank accounts or mobile wallet. And when we look at the outcomes that the country is looking for is we want to get to a level where we encourage and change the dynamics, especially the thinking dynamics, consumer preferences, and so forth, to a point where people are able, especially the consumers, are able to maintain the value that they receive, be it through domestic funds transfers or through the international remittances. They should be able to maintain those values digitally on their mobile wallet or in their bank account. And then they should be in a position to also access different services and products by using digital payments. In that way, we feel that the savings that they're going to be making, because most of the times they don't really use all the money that they receive. So the little savings that they're going to be making, they end up building up. And those are the small little amounts that tend to give resilience to the consumers, especially the vulnerable and the poor. And then they start to invest those kind of little amounts that they have been saving over time into micro enterprises, could be that build up to be small enterprises and eventually medium enterprises. So when we're talking about empowering the poor and the vulnerable, these are some of the aspects that Malawi is undertaking to ensure that the money that they receive it directly into their accounts, and then they don't have to go out there and cash it out, all of it, but they can still retain some of those amounts, and they can use those amounts. They can also use the money that is stored digitally to access different services and to make payments for different products. Now, in terms of, now when we're talking about people receiving money and so forth, probably we can take it a bit further. This is where now we can start talking about cross-border trading at a macro level, to say that people can also use these, the cross-border remittances or international remittances that are instant to pay for products when they're doing imports at a small level or exports when they're receiving their payments. So all these things are supposed to economically really boost economic development and growth in the country, at the end of the day, by starting with the small little steps that we are undertaking at the National Switch. I'm just going to share with you my experiences when it comes to implementing a National Switch. So I'm going to share with you the steps that we took as Malawi, as well as the challenges that we met. And then I'm going to share with you some recommendations which we feel probably would have done better, and that others that are also intending to implement a National Switch, they can also learn from. So in terms of the steps that we took in the implementation of the national switch, key to everything else is stakeholder alignment. And to attain stakeholder alignment, it is very critical that there are stakeholder engagements. As you note that most of the times the challenges that you meet is to get commercial banks, mobile money operators, microfinancing institutions in one room and sell an idea to them and get them to commit to that idea. It's usually a war that you always start and so forth, but it's better done from the onset than leaving it up to the end. So the first thing is to ensure that there's collaboration for the whole industry and you get buy-in from everyone else. And the fact that the national switch also supports government initiatives on financial inclusion, it is also very critical that the government through the Ministry of Finance as well as the central bank is part and parcel of these discussions. The second step is to get everyone to agree to the level of participation that is envisaged for the national switch. And this is where now you start to define to say who gets to participate on this national switch. And now from there, what we did as Malawi is after those discussions, we went on and drew a memorandum of understanding for the whole industry. And all the participants, all the stakeholders signed that memorandum of understanding. That memorandum of understanding, what it did was to define the roles that each one that signed that memorandum was going to play in as far as the national switch is concerned. And then we went on to defining now at a higher level the scope of the national switch. So this is where we define to say, oh, okay, we want commercial banks to be integrated to the national switch. We want the mobile money operators to be integrated to the national switch. We want the microfinancing institutions to also be integrated to the national switch. And then from there, we went on now using that high level scope for the national switch, we went on and started to define the technical aspect of the national switch. Now, this is where now we sit down and we look at the high level and we redefine it. So we look at when we say that we are going to integrate commercial banks, what exactly are we talking about? Is it going to be integration of MNOs, point of sale devices? Is it going to be account-to-account transfers? What is it exactly that we're talking about? So we went ahead and defined the scope, refined the scope much further, as well as we did that for the commercial banks, as well as the mobile money operators, as well as the microfinancing institutions. The only refining that we haven't done is for the fintechs up to now, but we really look forward to getting fintechs participating on the national stage. And now after that, we translated those documents into technical documents for the solution to be developed. And then we had to agree on the standards that we're going to use for interoperability and the protocols as well, and the message formats. We also went on to, in parallel to this, we had to identify a vendor. So we had to go through a procurement process and so forth. We had to install the computer hardware and commission it and establish links to all the member banks as well as to the central bank. And then we went on to do rule definition for the scheme for the national switch ecosystem. We defined the rules. Please be reminded of the fact that every step that we took, we did this in collaboration with all the stakeholders. And from there, we went on and implemented the national switch and offered training to everyone else and commenced on system integration testing. The system integration testing, it just looks at the compatibility between the interfaces, that is the APIs that the participants developed to enable them to integrate to the national switch. We went on to do user acceptance testing as well as launched the products. And from a governance aspect, this is where we talk about the operating rules, because the operating rules, they provide kind of a second layer of interoperability. They look at the non-technical aspects of interoperability. So when we're talking about operating rules, I'm just going to touch a little bit because Joao has, I think, has already touched on it. But we're looking at common operating rules such as that will address things to do with like chargebacks, disputes, how do you manage them, settlement, at what time it happens, and how frequent in the day and all that. And issues to do with in the case where there's a hot card from another bank and you're acquiring it, how do you handle it? All those things, or there's a blocked SIM card, how do you manage all those things? It also addresses issues to do with participation of non-banks, as I already pointed out, the fact that they don't maintain nostro accounts at the central bank. And it also looks at how, as an ecosystem, we manage fraud. Those are just a few of the aspects that are addressed in the operating rules. Now, in terms of the other aspects that we also looked at is to come up with a risk management framework for the whole ecosystem. In addition, we look at things apart from, so the risks that we address could include liquidity risks, settlement risks, and so forth. We also look at AML and CTF. We have to have strong policies that address all those things at the national switch. This is that is at the national switch perspective. The individual financial institutions that connect to the national switch would have already gone through a due diligence exercise by the central bank. So in terms of at their own individual level, these issues would have already been addressed, but we require that they also share those aspects with us. But then at an ecosystem level, we do have our own risk management policies and frameworks in place. We also look at pricing. Pricing is something that is really, I always find very interesting. The National Switch Limited, that is managing the operations of the National Switch, is not for profit making. But then we're dealing with institutions that are there purely for commercial purposes. Now you need to get to a point where you're really able to engage with them to understand the fact that the National Switch is one of the financial infrastructure that has been put in the country to address financial inclusion, and the fact that cost can be a barrier to financial inclusion. So there are different ways how we approach pricing at the National Switch. I'll give you an example. When we just started, when we went live in 2015, what we did was, that time we went live with ATM transactions. So we looked at the cost of jumping in onto public transport. Here in Malawi, we call it minibuses, the small little buses that we jump in, to go where you find that your ATM, your bank's ATM is not working and you have to go to the next ATM. So at that time, we made sure that whatever cost, the cost of jumping into a bus, the fare for the bus, the cost of the ATM transactions should be way below that cost to incentivize people to use other banks' ATMs. So that's what we did. We also came up with, apart from coming up with the fee structure for the National Switch, we had to agree on the fee sharing arrangement. So for the transactions that get to be switched through the National Switch, there are three participants on that transaction. There is the acquirer, the issuer, and the National Switch. So we had to come up with percentages to say what percentage goes to the acquirer, what percentage goes to the issuing financial institution, and what percentage goes to National Switch. Similarly, on mobile money operator transactions, we looked at what percentage goes to the sending mobile money operator, and what percentage goes to the receiving mobile money operator, and what percentage goes to the National Switch. This is in realization of the fact that interoperability comes at a cost, and anyone that is participating on the National Switch, there's a cost element that they have to undertake, and they have to be compensated for that. We also looked at operational issues. So when we started the National Switch, we weren't part of the Reserve Bank of Malawi, which is the central bank. So it was a project, a spin-off project that had to start from the ground. So It meant that we had to put structures in place, come up with policies, procedures, whatnot, and so forth. So at an operational level, we also had to put in place all those aspects to make sure that we are geared in managing the national switch and the whole ecosystem. We also looked at the participation requirements that I already looked at. What we do is at National Switch is, as I said, that this is an all-inclusive switch. So participation is open to all financial institutions that are licensed by the Reserve Bank of Malawi, or they have a letter of no objection from the central bank. So all those have got the right to participate on the National Switch. And for anyone, for those financial institutions to participate, it is very imperative that they should have an operational digital platform, because there are no manual interventions. This is purely digital, or the things that happen at the National Switch. And then there's a requirement for the participants to develop their own APIs they use the standards that we share with them, as well as the protocols that we share with them and the message types for each use case that we share with them to come up with an interface to the National Switch. It is very important that everyone strictly adheres to those standards and protocols, because then interoperability is not going to take place. And usually it contributes to inefficiencies, high rate of failed transactions, and so forth. They're also required to also adhere to the operating rules that are defined by the industry. And after that, we go through the system integration testing that I talked about. In some cases, there are some joining fees that everyone is supposed to pay, but the joining fees are not standard for every industry. So the commercial banks will have different joining fees, MNOs, as well as the fintechs and so forth. You look at the level of operations and so forth. But then in terms of coming up with any fee, including the joining fee, those concerned parties, the participants, they get to participate in decision making. So this is not done in isolation. They get to be part and parcel of that decision making, so that they also have a say. Well, I've talked quite a lot. I'm going to go to the challenges that we faced as a national switch here in Malawi in implementing the national switch. One and foremost was the stakeholder alignment issues, to get everyone to agree to work with each other. It took us more than 2 years to get member banks to agree to have the mobile money operators to integrate to the national switch. But we eventually managed not only to get them to participate on the national switch, but also to acquire share equity into the company that is managing the operations of the national switch. The second challenge that we usually meet is to do with pricing and the fee sharing arrangements. This is where I talked about the fact that the national switch is supporting government in terms of ensuring that the poor, the underserved, and those that are not served at all to also have access to digital financial services. So for that reason, pricing becomes a key element at the national switch and for the whole ecosystem. So the challenge that we meet most of the cases will be, I've invested so much into this, and the returns are not, there isn't really a business case for them to really integrate to the national switch. And usually they would want us to commercially price the transaction fees at the national switch. We always remind them the fact that this is driving financial inclusion, and we want those consumers out there that don't have access to financial services also be given an opportunity to access digital financial services in the country. The other aspect is when it comes to standards and operating rules, getting everyone to commit, adhere to those standards and operating rules. Sometimes it becomes a challenge, but what we do, we found a way on how we can work with that. Because what we have noted is for us to achieve efficiency at the national switch, it is very imperative that everyone plays and make sure that they adhere to the standards as well as to the operating rules. The other challenge that we meet quite often is when you implement a national switch, it doesn't mean you're done with investment. There's always a need to continuously be investing into the national switch. And that investment comes in not necessarily on the infrastructure only, but also when you're introducing new use cases. Because when you're introducing new use cases, there is a need for everyone to update their interfaces to the national switch for them to be able to receive and process those transactions. So that is one challenge that we always meet. And then you can have vendor issues sometimes where there's contract misalignment between the country as well as the vendor that is supplying you with the solution. And with those few challenges that I've mentioned, there may be more than that, but yeah, there are issues to do with where the usual ones where you have got incumbents, the big financial institutions that feel that they can drive financial inclusion on their own. You also have to just find ways on how you can engage them to also participate on the national switch. Now, I'm going to talk about some of the recommendations on how we have overcome some of these challenges. Now, in terms of stakeholder alignment, engagement, well, as I pointed out when I started my presentation was the fact that the national switch is owned by the members. The CEOs of those financial institutions, they sit at the board of the national switch. As board members, it is to their interest to ensure that the operations of the national switch are successful. They owe it to the institution. Apart from that, we have leveraged and we have built a very strong relationship with the central bank where they provide oversight on the national switch, and already they provide oversight on all financial institutions. So they have helped us in most cases in terms of motivating and incentivizing the whole industry to participate on the national switch. When we started implementation of the national switch, Malawi did not have a payments law. And it was way after in 2017 when that law was enacted in Malawi. The second item is to do with the challenge that I talked about, the need for continuous investment on when we're coming up with new use cases at the national switch. So what we have done is, what we do is on an annual basis, we come up with a list of projects that would want to undertake. And then we start to engage the members on the national switch. And that engagement is through, we start with conferences where we discuss and why certain things have to be done at the national switch. And most of the times, whatever we are doing at the national switch definitely is in support of the financial inclusion agenda as well as digitization of payments in the country. So we usually already, for that reason, we usually have good support from the government through the Ministry of Finance and from the central bank. But then in engaging the various institutions, we do the conferences at a high level, we take it to the board, and we have to come up with business cases because then we have to look at the sustainability of the national switch. And as the board, as well as shareholders, it is to their interest as well to ensure that they're not continuously pumping capital into the national switch, but that the national switch is sound and it can sustain its own operations. Now, for that reason, and we can't overprice because we're driving financial inclusion, so it is about increasing the use cases, it is about increasing the volumes, and you cannot increase the volumes from just one use case. You have to increase the use cases that are switched through the national switch. In terms of pricing, as I pointed out earlier on to say, whatever we do at the national switch is done collaboratively with the members. So in terms of pricing of the transactions, fee sharing, and so forth, usually when we are facilitating those discussions at national switch, we take a back stage. We just highlight to them and remind them that whatever pricing that they're going to come up with, they have to always remember that we are driving financial inclusion initiatives We're thinking about the consumer that is in the villages, the rural areas, the same urban areas that don't have access to financial services, and we want them to be included in the form of financial services. And for them to be able to do that, cost cannot be commercial. So usually the industry would sit down and discuss and agree and so forth. Once we agree, we take it to the board and then they approve. In terms of, we usually get some, okay, let me just wrap up. So yes, in terms of, it is very important that we actually, our collaboration is very key in everything that we do. And how does interoperability influence for financial inclusion? Interoperability, it gives you a common shared digital platform, and in doing so, you achieve economies of scale. And then as a result, usually you find that cost becomes lower, and because cost is lower, it becomes attractive to those that don't have access to digital financial services. And you find that it encourages people to sign up to DFS. It also, for the industry, the financial industry themselves, it offers us all network effects and provides us an ability for critical mass acquisition, and everyone really, they get to benefit from it. Interoperability, as I already pointed out, that it offers instant value for the transactions. What we have noted that it builds up confidence in those that are using it, the consumers and all that. And you know that the poor that want them to be included in financial services most of the times are vulnerable. Any small little thing that shakes them may take them back to what they have always done, that is keeping money under the pillow, in bottles or somewhere else. So when you have instant payments where they get instant value for the transactions, it builds up their confidence into the digital financial service space, and uptake becomes high. We're running out of time. I've got so much that we can share, but I think I have to wrap up here. Sarah is just looking at me to say, time up. Thank you very much. Look forward to your comments and questions. Thank you.
Thank you, Gertrude, and thanks, Cheryl, as well. We are overrunning a bit, but everyone's still on the line listening. So let's just try and wrap up in the next 10 minutes with a few questions, and then people can always contact you and reach out directly if they've got specific questions to ask. I just sort of said just a quick personal, quick wrap up really. It's easy when we think about interoperability to think of it as being something like just a switch, right? Just a piece of technology that's in place. But actually what you've both described say it's so much more than that. It's about having the right business model and the right use cases so that it is used on volume, on scale, that having the right technology and hardware, that there's APIs, all sorts of things that are involved. It's not just something simple you just kind of drop in and it will work. And it needs to be inclusive. It needs to involve all the stakeholders. So not just banks, but we're talking about MNOs, talking about smaller organizations like your MFIs and your SACCOs, your saving groups. And then you also talked about the important role of the central bank. So, you need to have the central bank on board to both act as a carrot and a stick. I guess for those who are not quite coming on board, it can be very helpful to get them across the line to making choices. But I think, as you said, and you've emphasized so much, Gertrude, whenever we've spoken about the Malawi switch, that the focus was always on financial inclusion. It was always about bringing something in to make those costs more affordable for the user, to encourage, and like you said, the instant nature of it, to give people that trust in digital financial services so that they want to use it, and then explore more use cases so that they don't cash out, that you're driving more use of digital payments and digital approaches within the country so that you can then come back with more use cases and increase the volume, like you were saying, to make this switch sustainable. So it's so much more than just one piece of technology. And I can only imagine what a challenge it is to get all those different stakeholders on board, aligned, and make the right choices. So it's fascinating to hear both what is happening in Malawi and also João in Mozambique. So I'm going to pop across to some of the questions that we've got here now, and just sort of a few of them. We're not going to get round to all of them, but just to get round to a few. Joao, we've got a question that came in about the CMO switch. Is the mandate from the Central Bank of Mozambique?
Well, the CMO switch is governed by the central bank because he has the majority of the shares. The other shareholders are the commercial banks, but all the board, the executive board, is from the central bank. So let's say that is that only managed by the central bank. Yes.
Great. Thank you, Joao. And Gertrude Franz has got a question for you. He was asking, are all the commercial banks already integrated into the national switch?
Thanks a lot, Sarah. Yes, all the commercial banks in Malawi are integrated to the national switch as well as the mobile money operators. We're currently testing with the aggregator for the microfinancing institution and savings and cooperatives. So we are at an advanced level for the MFIs. I think we are in user acceptance testing right now. But the commercial banks are all integrated. The mobile monies are all integrated to the national switch. Thank you.
And
sorry, Sarah, let me just compliment. The central switch here in Mozambique is all the banks are interconnected with the central switch, not the MFIs, and now they are starting with the MMOs. And they're also in the base law, there is also the initiative for the aggregators and the financial service providers and fintech companies to be integrated. But they are just putting in place a new software, so it's a little delay for that integration. But there is a plan for that.
And I think this is an interesting question from Combe, asking whether Gertrude or maybe Joao, you might also have as well. Do we know are there any statistics out there that show how it impacts on financial inclusion by introducing interoperability?
Thanks a lot, Sarah. What we can see is basically most of the times is the new acquisitions, and those acquisitions are basically coming from the financial institutions themselves. So what we do is there are different factors that actually contribute to financial inclusion, and not necessarily only interoperability. What interoperability does is to provide convenience and accessibility and affordability. This is something that is helps in terms of advancing financial inclusion in the country. So for Malawi, the economy in Malawi, there are different factors. One of them is to do with digital IDs, because at the time that we were going live and so forth, the country was also coming up with digital IDs for these citizens. So they all came together at the same time. And what we noted was, in terms of new accounts, that is both for commercial banks as well as the mobile money operators, it actually doubled. So you cannot just contribute the drive towards financial inclusion just by interoperability. There has to be several factors that are working together towards financial inclusion. Thank you.
Yes, I have the same opinion. That's true. Financial inclusion is one of the elements, but it's not the principal one. I think that the principal factor for financial inclusion is to have trust in the system and to gain trust in the system from those people that are excluded, and that the trust is gained based on the persistence in terms of advertising, of marketing, showing the benefits, things like that. The example here in Mozambique, the M-Pesa, it's is the top one MMO, just increased dramatically in the last 2 years because of massive marketing and massive implementation of agent in the network in the country. So that brings confidence to the people, and then that brings what we call it the proximity of a physical point for financial services. It could be an ATM, a POS, or an agent from MMO. That must be present around the people to bring them to the financial system. But even so, there is lots of people to onboard because, for instance, in Mozambique, less than 50% of the people have one bank account or mobile money account. So there is lots of space to evolve and to increase the number of bank accounts or mobile money accounts.
Great, thank you very much. I'm going to go and try and find us one more question because I know we're half an hour over time. So let me ask, I think Benson's question, which came in quite early, is how does interoperability impact market efficiency from both the supply and demand side of digital finance? Shall we start with Gertrude?
Thanks, Sarah. Yes, I think I'm just going to give you an experience that I had with the Malawi market. When we implemented the national switch and everyone went live in 2015, what I noted was almost all the financial institutions had to go back and either overhaul their payment systems, the digital systems, or upgrade them or replace them with new ones. So basically, that is an indication that indeed interoperability, when implemented in a country, can introduce efficiencies in the system. But only having said that, you know, once you implement the national switch, then everything that financial institutions are doing, it becomes transparent. So if an individual institution has got quite a lot of inefficiencies and all that, eventually they come out in the industry, because now people start noting that most of the times your systems are not working. They start talking to say, oh, if we go to these institutions, their digital channels are always up and running and so forth. So everyone is forced to level up and to ensure that they are running very efficient systems. And indeed, I'm going to agree with that question. It has really helped to improve efficiencies in the financial industries. Thank you.
Thank you. João?
Yes, for sure, it improves the efficiency because you have to be all the people, all the stakeholders or all the participants must be in the same position in terms of technology, in terms of reliability, in terms of resilience, in terms of those processes, in terms also in terms of risks and frauds, because if one is lower than the others, there is a discredibility in the market, and people and people go out of that financial service provider. So if all the people came together in a switch, for instance, that is a good example. That for sure increases the credibility of the system, increase the liquidity of the system, and increase what I told before, let's say the confidence in the service and financial services. That is one of the key aspects for the people that are not financially included, is to gain the confidence in the system, and the interoperability can bring that confidence also.
Thank you, João, and thank you both so much for your time today. We've gone over in our time, but we've had such a valuable discussion about interoperability. I really appreciate you spending the last hour and a half with us, and also to our attendees that have also stayed with us throughout the call. Apologies, we have not got around to answering all of the questions, but what we can do is share some of the responses with you all over the coming few days. And I can also connect you through to João and Gertrude so that you can ask them any questions that you might have directly as well. It's been such an interesting session. Interoperability, like I said to Gertrude last time we were on a session together, it can be such a dry topic that, you know, but actually both of you have brought it to life so well, but also kept reminding us why we need to have interoperability. It's going back to the customer, making it easier for them, making it less costly for them, giving them that trust, increasing digital financial service use and uptake, and ultimately increasing financial inclusion. And it's so nice to hear both of you speaking so positively about that, because what we know is that Malawi and Mozambique will be focusing on that aspect of financial inclusion in their decisions, which is really key and really important. So Thank you both very much. And we can maybe even look forward to doing another session at some point on interoperability too, seeing as there are so many questions and so much interest. But thank you so much, everybody. Have a wonderful afternoon, day, evening, depending on where in the globe you are. And I look forward to seeing you all on a webinar again soon. Bye-bye, everyone.